Hi, good afternoon, everybody. Thank you, Professor Junanwala, for the opportunity. I'm really talking about finance as financial freedom. And, I'm going to talk a little bit about why is finance so important when we talk about this country in a little while. But in terms of when you look at our own lives at this point of time, one of the big things that gives us a sense of power over our lives is the ability to be able to spend the money to be able to get what we want, whether it's healthcare, whether it's something that we need, whether it's a car, whether it's a house. And while we don't obviously keep thinking about finance all the while, but it actually is a big, big, big enabler. And the best kind of financial services are the ones which work in your background, where you don't really have to think about it. Before I get into the details about why finance is so important, and we've actually seen in this country that a lot of policy decisions have been taken to make sure that finance is available to all. There was nationalization of the banks, which started their entire journey. After that, we've had many rural development programs. We've had targeted lending for low-income households, and all of this has been towards a certain goal. Uh, but finance is not some of those complicated things that we think about when it comes to the markets, for example. Finance does three very simple things. One, it moves resources across times. So I have money today. I want to buy a house today. But my money is not the chunk of money that is required to buy a house. So what I do is I borrow from my future income and bring the money from future to today. Similarly, I'm earning today. I will not be earning when I retire. So I actually take the money from when I'm earning to when I will retire and therefore pension. The second thing is moving money across states of the world. Now, one of the big challenges is today I'm healthy and I can take care of myself, but what happens when I'm not so healthy? So, insurance, for example, takes care of those challenges. And the last thing is all about transactions. How do you move money across people and different kinds of localities? And that's where remittance and payments come into picture. So, at a very basic level, finance is extremely simple, and it's as simple as just this. Uh, Now, coming to really what is the problem that we're talking about, and why is finance so important? In a country like India, we have over 85% of the people working in the informal sector. Uh, Now, one of the key characteristics of the informal sector is that a lot of people are self employed. Now, I, sitting in a remote village today, may not even be able to earn a living unless and until I have some capital that I'm investing. Now, that capital could be to buy a cow, it could be to set up a shop. A large part of this country is self employed. And what it means, therefore, is if I do not have access to money, I can't really earn a living. Sometimes this access to money is required just for immigrating out of your rural context into the urban context. Uh, Access to finance can actually make some opportunities available where you are, so it can even make immigration not as important. But the point is, unless you have finance, you can't really make a living. Now, that's really the first starting point, and this is really the reason why you see so many policy decisions keep talking about financial inclusion. But once you start to focus on inclusion, other challenges include the fact that most people have learned to live their lives without financial services. So when you look at everybody, they've been living their lives without insurance. And they've been living their lives, their forefathers, grandparents, everybody had learned to live their lives without it. And therefore, the moment you start to say that, why don't you buy a critical health insurance product? It basically sounds odd. It doesn't relate to what you're thinking of. And therefore, the challenge of finance is also to make finance very easy for people to understand. And therefore, when you look at how money has worked, bulk of the growth in this country has been in the area of credit. It's easy to understand. I don't have money and therefore I borrow. How do we give finance that entire feeling of the fact that it becomes easier and easier for me to understand? Now, in terms of our vision, and we are basically what we have done, and it's in the paper out there, we've actually talked about a vision for 2030 to 2035. To our mind, a very tangible impact to financial inclusion can be made within this time frame. After that, it will be more like sci-fi. You touch something and it automatically tells you whether you can take a loan or not. It's increased user interface. But what we expect to happen is that finance is available to everybody, and we believe that this will happen through smartphones. We heard Professor Ramamurthy today talk about how mobile technologies are improving, how access to finance, how kind of mobile penetration would increase. And to our mind, there is a need to make this ubiquitous. The second thing that I'm talking about is that we will move from selling products to selling solutions. So why do we want to confuse a customer to say that buy three different kinds of insurance, two different kinds of savings? We can actually start to talk about, you have a goal to get your kid educated. Here is a product like Lakshya, which basically combines an investment, three different kinds of insurance, and a loan against securities if you need to borrow money urgently. But from your perspective, as long as you put money in Lakshya, your kid will definitely go to school. Uh, there's a lot of focus again that policy places on financial literacy, and that's really hard for a person who, on an average, does not understand what kind of health issues could be out there. To tell them to buy a critical health insurance policy by going through some financial literacy workshops is going to be very hard. It's almost like saying medical literacy. I can, of course, get medically literate to say why I should be doing certain things in life, but for me to decide upon this for myself is going to be very hard. And our belief is that the country needs to move towards right to suitability. And unless and until that is there, there will be an inherent discomfort that customers will continue to have about providers. Uh, Similar point is really coming to no fine print in financial solutions, because you again don't want that there is a hidden clause out there, because it takes away the confidence of specifically a segment of population which is new to this entire journey. And then the last part, uh, anything that you start to build your life around has to have continuity out there. You need to believe that when you switch on a switch, the light will basically switch on. And unless and until that kind of predictability exists, you will not be feeling comfortable to kind of cut down your existing structures that you have. So you will not stop having a candle in your house. And that's basically true for finance as well. It needs to be reliable, it needs to be continuous, it needs to be flexible. If I, as an informal sector customer, make money seasonally, why should my loan be a equated monthly installment loan? The challenge is that not a single provider, including the largest state banks, today talk about some of this flexibility out there. And then the last part here is that it needs to be delivered to a customer in a language that the customer understands. Now, the challenge, as I kind of talk about when we said ubiquity, is that we are a country of over 1.3 billion people. Out of that, we have nearly 100 crore mobile phone connections. People like me kind of take the average to a little more complicated situation. I have two numbers. People who have mobile phone with internet data is around 40 crores. Now this data is changing very rapidly, so some of these numbers might have already been a little outdated. But again, people like me have three connections, two SIM cards, one data card, so some of that is out there. And then the number of people who've made one digital purchase of any kind is 12 crores. Now, this number is a little different from what you might have heard from Professor Gaurav Raina, and I want to check with him what that number really is. He talked about a 30 crore number. This number I got from a kind of a talk that Dr. Nandan Nilekani gave, and he said that 12 crore unique people have ever used any kind of a digital transaction. Uh, Now, in a country which has 80 crore people, how do we now increase that 12 to 80? And how are we going to make sure that customers who are first of all getting new mobile phones, which are smartphones, get used to it, get comfortable with it, and start to use it to make digital transactions? That's the kind of work which is ahead of us. And what doesn't help is what you see on this slide. So what you see here on this particular thing, this is actually from my own bank statement. I went to a bank which is trying to serve low income households. I deposited 100 rupees and they charged me 60 rupees as deposit. These are charges that different banks have put, which is an ECS bounce charge. No check was presented. You just told a bank to deduct money from your account, and the bank, your own bank, which is not even the lender, is charging something around 750 rupees for every single such bill. It's almost like saying when you present your debit card, you don't have money. It should say, sorry, no money, transaction failed. Why should there be a 750 rupee charge for something of this sort? And when we start to look at the ecosystem of making finance available, we need to create a system which is trustworthy. We need to have people who can say that I bank with this particular entity and I know that there is nothing hidden in terms of what is happening. Now, when we start to look at just the sheer enormity of the challenge, what I would say is that timing is of essence. The time is not only a constraint for this presentation, but the more time that we take out here to build this out. We know that there are over 800 million people who are not getting the kind of services that they require. Now, in our vision of what could happen, and this is something like a vision from that I've tried to put together along with my colleagues Vipul, who's also part of some of the discussions here, uh, has been to say that what could be the life of a customer like. So you basically open a new kind of an account, and you do it through whoever you're banking with, whether it's an NBFC, whether it's any other entity. You basically open a new goal account, and this is a goal account that you could use to save for example, your daughter's college fund. It'll come in very handy with what Andrew talked about. You basically get your this goal account to be active, and what you get along with it is a no fee savings account, and it starts to create your digital footprint. You basically start working towards it. You save every month. You have a cash in touch point which is not more than 1 kilometer from your place. So even if you are getting your incomes in cash, somebody digitizes it. You move on. As you start to build data, you start to get personalized services which can start to make financial services more and more fine tuned to where you are. You start to get higher onto the chain, and you get a card ID which basically now starts to get you into the fold of digital services. And then you start to do everything cashless. The kind of work that Professor Raina talked about of how transactions could kind of become very important, and all of the AI related work to make it interesting starts to kind of flow there. And then eventually what you start to do is try to get to higher order things which basically start to get you to the path of prosperity. And of course, at some stage, you become a fully digital customer.